we all know, I have to talk mortgages for a second. What happened yesterday, right? And we mentioned it very briefly, and Rob did a good job of explaining it too. For those of you guys that were not here, the Federal Reserve went ahead and cut their federal funds rate by 25 basis points. What does that basically mean? The Federal Reserve had basically their backs to the wall. They really kind of had no choice but to cut, right? Obviously, there's a new administration in power that from the second that new administration came in power, them and the Federal Reserve immediately started butting heads to the point where he said, "Can I fire you?" And he said, "Well, technically you can't." And just for you guys to know, and it's important to share, why do I share this with us? Like when I share with our real estate agents and I talk to them about CPI and PPI and inflation and all that stuff, they're like, "Dude, I just want to know what the down payment and closing costs are." Right? And then I'm like, well, let me explain to you why not that I never talk to clients about down payment and closing costs, of course we do, but I do a heavy emphasis with clients on what's happening on the market, why you should lock right now, why it makes better sense, for example, to take this particular position, this particular program instead of something else. Judy and I just closed a client he was up there in terms of, very sharp buyer, wanted what he wanted, had the, merits to get what he wanted, if that makes sense, credit score, income, assets, and stuff like that. Also excuse me for my French, ball buster, right, where he's coming after, bottom lines from each professional. I get it. I think it was like one phone call, two phone calls. I'm extremely stern, and she knows I generally do not work with clients who shop. By the time we've had our first consultation or second, the experience you're going to get with us is a little different than maybe a Rocket or a Quicken, who run a great model, but that's not mine. And I know he was taken aback. Many clients usually are. And then eventually they're like, well, I can understand where they're coming from. By the end of it, the client was extremely grateful because he truly knew, okay, this is a whole different experience. And I know he was already pre-approved before than what I was used to. When we were going into tax savings, understanding why you should do this, understanding why you should do that, understanding about the HOA, fighting everybody to get the HOA involved, getting the seller involved, doing this, doing that. The reason why I share this is I think it's important in all of our respective fields. It's all to an extent correlated back to the economy. Let's be honest, the economy's biggest portion of inflation, over 50% of it comes from shelter, which is real estate, right? So when the Fed cut, going back to that point, when they cut their federal funds rate, what we're going to see is car loans, interest rates are going to go down. You're also going to see, if you guys ever look at your credit card statements monthly, you're going to notice your credit card interest is a little bit less. And then you're also going to notice HELOCs, a lot more HELOCs starting to come around. I was just talking about it with Marco and Rob, with some of the clients where if you guys are in some type of, I guess you could say, product-based business, I guess you would consider yourself a product-based business, where a client there's trillions and trillions of dollars in equity in homes. So having a consumer tap into a HELOC as opposed to maybe exploring a short-term interest rate loan from a One Main Financial or any of those institutions, tapping into that equity is going to be the new thing, and it's going to be cheaper. At one point, we were seeing the rates almost as high as like 11-12%, which was still really not as bad as a short-term rate. When you see like One Main or I don't know the other ones, Upstart, they're like 18-20. So that's going to be interesting. Now, talking about long-term rates, that's the real estate industry. That's mortgage interest rates, long-term rates. So when they cut their short-term rates, what that basically means now is that people are going to eventually want to invest in the stock market. But what happened yesterday was a little bit of a spin, where not only did the bond market take a huge crap, so did the stock market. And I think even as of today, it's still taking a hit. And the main reason why is because we were expecting, basically yesterday, they were supposed to give us an idea as to what they were going to do next year. How many times were they going to set the economic, it's their dot plot, it's called, which is essentially their economic outlook. We were expecting a 4-time cut. They were supposed to cut 4 times. They basically changed their entire stance, catching everybody by surprise, and said, we're only going to cut twice. So now everybody's like, holy shit, that means we're going to go higher for longer. Me as a real estate professional, and I'm sure Judy, who we don't care if interest rates are 7% or 8%, I love it. I'm actually very happy that they're doing this because I think prices will maybe start to stabilize just a little bit. And then I think those consumers who are going to eventually flood the market will probably take a step back or two. So then when Judy and I are working with 5 clients and we place 5 offers, we could probably get 3 accepted, as opposed to when it was COVID, I worked with 10 buyers, which was great, but I only got 3 accepted, right? And I think they're in a position. Another important part too for us to understand, because many people don't know, is when the executive chamber changes with President Biden and then President Trump and these people, the Federal Reserve continues to remain in power. They do not change positions when a new administration comes in. Many people don't know that, especially consumers. Because like, well, Trump's going to come in and he's going to do this and he's going to do that. He doesn't have, to an extent, not to get political, but a direct correlation to that stuff. So it's important for us to know that. Those people, especially Joe Powell, remain in power regardless as the presidencies come. So they care about the economic outlook regardless of it going red or blue or whatever it's been. Okay. And I think when we saw the last month when rates dipped to like 6s and even some of my FHAs were like 5s, it was really the pent up demand and then the positive outlook as to us now going red. And when we went red with Trump, also the House and the Senate went red. Now, interest rates are going to eventually come down. It's just the whole point is when, right? Now, what we saw also the last month is inflation starting to creep up just a little bit. Again, with the change in political power, I hate talking politics, but it's important for us to understand it. People are like, well, okay, now there's a change in power. We're not stuck in blue. Now that there's a change, we're going to go start spending money. And that's what happened Black Friday and Cyber Monday. I think it was like the highest, I don't know what the stat was, but people are spending. I'm a sucker at that stuff too. I'm really bad at that stuff. But I buy business stuff, not personal. So that's going to be really interesting to see because again, we don't want to happen in the 70s and 80s as I was reading up on this. The same thing happened was inflation got really high, then the Fed took an aggressive approach to keeping rates high. Then they cut, but they cut too quick. And they cut consistently too quick, so we caught a second wave. So that's what's happening right now is that the Fed wants to avoid that second wave of inflation. Okay? I know it's boring stuff. Does anybody have any questions on that?
I didn't mean to go on.
Huh? Oh, you're good. No. I always consider it boring stuff. But I think it's important, again, because it somehow correlates to our businesses in one way or another, right? Especially with travel. You guys got crushed in COVID. And then now, you guys are actually crushing us on inflation because lodging away, which just affected, I really watched this stuff, but wholesale inflation, which comes out with the PPI report, Producer Price Index, it actually jumped up like 0.2 of a point because people are going on vacation. Lodging away jumped up significantly, which is great, but yeah.